Saturday, May 20th, 2017, Monaco 64, home of alternative economics and contrarian views. The dollar, in my opinion, looks pretty sickly. I'm not saying we're going to see a dollar collapse, and I don't think the dollar can collapse, for example, against the other fiat currencies. It might weaken against them or have a sharp drop, but it won't collapse per se because the dollar is the best of the fiat currencies still. If it's going to collapse, it will be against real things, you know, like precious metals, gold and silver. But I want to look at the technicals in the dollar index, also the British pound and the euro, and cryptocurrencies also, you know, are really racing ahead this weekend. That's a signal that the dollar is weaker, not only the dollar, but the other fiat currencies. But I do think that cryptocurrencies are getting a bit ahead of themselves now. I wouldn't chase them. I would just hold on to what you have in cryptocurrencies. Maybe if you need some liquidity, take a little bit of profit. For example, Bitcoin right now is at $2,038. That's, you know, all-time high. What else? We've got ETHEREUM at $128. The recent high is 131. We've got Ripple up 11% at 0.36. We've got Steam up 18.5% at $1.25. So I think these are getting ahead of themselves. I'm not selling my Steam, not selling my Bitcoin, but I'm not buying anymore. And if the only way I'm going to buy Bitcoin now is when I transfer some of my Steam into Bitcoin, but I'm not, you know, buying Bitcoins with British pounds, for example. So yeah, the main theme of this video is to put across the idea that the dollar looks precariously weak right now. It's been weakening since end of 2016, beginning of this year. We've gone from above 103 in the dollar index. We're now around 97. There are, of course, you know, markets don't always trade in a straight line down or up. For example, Bob Moriarty from 321gold.com wrote something on Thursday about the dollar. He said, sentiment says the dollar index is about to turn. He says everybody is negative on the dollar for a variety of reasons. We all know what happens when everyone gets on one side of the boat. Look for a turn in the dollar shortly. The sentiment is the lowest in 6 years. The mob is always wrong. He might be right. We might see a short-term bounce in the dollar index, but medium to longer term, it doesn't look good. And the other reason I say this, you know, looking at more fundamental things is, you know, there was an article on Zero Hedge on Friday about St. Louis Fed President Bullard. He made a comment saying that, you know, he slammed the recovery narrative. He was saying that the economy is not doing as well. And he hinted that the Fed has made a policy error. And that would be bad for the dollar. You know, if the Fed had to backtrack and not raise interest rates anymore this year and the economy continues to weaken. And this goes to show also a kind of a web-bot hit, the term policy error, because of 2-3 months ago, I don't remember exactly which web-bot report, but Cliff High said that there were data suggesting an error from the Fed. So this is kind of a mini web-bot hit. We have to wait and see still to see if that materializes. So that could be another reason why, you know, fundamentally the dollar is not looking very good. So let's look at the chart. I've got some charts here, good charts here with moving averages. we've started with the dollar index, and the range is from the 1st of October 2014 till now. The reason I chose that date is that it's not too short term and it's not too long term, so I think it's pretty good timeline. So here's the chart. The black line is the 50-day moving average. The orange line is the 200-day moving average. You can see that since the beginning of the year, the dollar index is making lower lows, lower highs, and really topping. Like Bob Moriarty said, maybe too many people are on the short side of the dollar. We might see a correction, but to me, it looks like that chart is really looking to go, you know, and test that 92.50 level, which was the low in 2016, just below 92.50. And the fact that we broke out of above 100 late last year, but we failed, is quite significant. Unless we rebound and get back above 100, the dollar index doesn't look very good, in my opinion. And that 50-day moving average there, when it crosses below that 200-day moving average, it could even accelerate the descent of the dollar. So yeah, doesn't bode well for the dollar, the technical picture, in my opinion. So now let's look at gold, which is one of our favorite currencies, I guess. So here's the chart, same range, 1st of October 2014, 50-day moving average, the black line, and the orange line is the 200-day moving average. And as you can see, we're just, that 50-day moving average is just crept up above, that 200-day moving average. So that's a very good sign that the 50-day moving average has done that. The last time we had the 50-day moving average go above the 200-day moving average was last year in the beginning of the year, when gold was rising from, around 1045, 1050, and then it traded all the way up to 1375 in the summer of last year. And then, after the election, we turned down, went down to like 1125, I think, roughly, and we haven't been 50-day moving, the 50-day moving average hasn't been above the 200-day since, around November time last year. So this is quite significant here. We'll have to wait and see how it develops. Let's have a look at silver. Silver chart, same range, 1st of October 2014 to now. And you can see the 50-day moving average try to get back above the 200-day earlier, like 2-3 weeks ago, and it failed when silver started dropping quite strongly. But now it looks like starting to try to turn up. So it would be good to see that 50-day moving average get back, go above the 200-day. It would, confirm the gold move. So we want to see silver move up nicely next week. We did close above 1682, which is the low there earlier this year. Around March time, I would say. I think we closed around 1684.85 last night. So we need to get back above 17 and see a good move in silver, and we could see the 50-day moving average creep up above the 200-day. And now I want to look at the British pound, of course, as a lot of my viewers are based in the UK and I'm based in the UK. And it's also part of the dollar index, not the huge part as the euro. But let's start with the British pound and then we'll go to the euro British pound. you know, since October last year, we'd been in the range between 120 and 128. And since the announcement for the snap election, you know, the British pound has done quite well. It broke above 128, and now we're trading around 130. And as you can see as well, the 50-day moving average, excuse me, moving above the 200-day, that's quite positive. So I think the British pound could remain fairly positive against the dollar. I'm not saying, you know, the bear market in the pound or cable is over, but I think, you know, 135 could be a reasonable objective, or any, you know, in the medium term, longer term, we might even go back to test 140. So that, you know, that goes hand in hand with dollar weakness, the fact that the pound's doing well. And now let's look at the euro, which is the bulk of the weighting for the dollar index. So here's the chart of the euro. Yeah, the euro, I mean, looking back till like April 2015, for the last 2 years, it's basically been in a range between 105 and 115. So the 50-day moving average is also very close to moving above the 200-day, and it looks quite positive. It looks like we could go test 115 very easily, and that would be a big resistance though for the euro. If it could trade above 115 towards 120, yeah, that would mean trouble for the dollar against the euro. I'm not saying that would mean that the dollar's collapsing. It's just that it's going faster down against the euro. You know, it's just another fiat currency, the euro, don't forget. So yeah, euro also looking quite good there against the dollar. So I guess we just need to wait and see, you know, next week how the dollar continues to do. It should be positive for precious metals, in my opinion. The things that we need to see is the euro and also silver, that 50-day moving average get back above the 200-day moving average. That would confirm the gold move. Cryptocurrencies getting very, very bubbly. You know, markets don't go up in a straight line. Don't chase it. Longer term, I think it's still a good, you know, place to be. I still believe physical gold and silver are the preferable insurance against fiat currency debasement though. So if you enjoyed this video, please give me a thumbs up, share it far and wide, subscribe to my channel if you haven't yet. You can also watch my videos and this video on steemit.com. And if you'd like to donate to the channel, there's some links below in the description. I'll talk to you later. Goodbye.